Hello everyone, let's dive into today's video and let's get straight into what we're talking about today. Real estate. Real estate is a type of investing that you can use to generate more income. So let's start talking about it. Before we start talking about it, please be sure to subscribe to Joel's Random Stuff and be sure to like this video. Let's get into the topic. Okay, so why should you consider getting into real estate? Like, why do real estate? Obviously, it has a steady income to provide on the side, but really, why should you do it? Well, basically, real estate historically has a stable and profitable investment, provides cash flow, tax benefits, and can appreciate over time. Plus, it's a tangible asset you can physically see and touch. Unlike stocks and crypto, like we've talked about, you can physically go drive up to the property and see it. Like, it's not like it can drastically drop to $0 because it's physically there. Unless you demolish it or something, it's not gonna lose money to like $0. You're not gonna drastically lose that money over time. Okay, so let's get back into why you should invest. Real estate's also a great way to diversify your investment portfolio. Just like I was saying, unlike stocks, bonds, and crypto, real estate doesn't necessarily move tandem in the market, which means it can provide a hedge against economic downturns. And let's not forget the sense of pride and accomplishment that comes from owning a property. I'd feel pretty proud if I owned a house or apartment, the sense of pride. Now let's talk about types of real estate investments. Okay, there are several ways you can get involved into real estate investments. First is residential properties. These include single-family homes, condos, and townhouses. This is often the starting point for many investors. They're easier to understand and manage, especially for beginners. Then let's talk about commercial properties. These include office buildings, retail spaces, and industrial properties. Commercial real estate can be more complex but offers higher potential returns and longer lease agreements. Now let's talk about rental properties. Buying properties to rent them out can provide a steady income stream. You can opt for long-term rentals or short-term rentals like Airbnb. Real estate investment trusts. These are companies that own, operate, or finance income-producing real estate that allow you to invest in real estate without having to buy property directly. They're a great way to get exposure to real estate with lower capital. Let me explain that in a bit simpler of a way. So basically, you pay the money to someone and they'll use that to buy a property. You're paying a percentage of the property. Then they manage the property and all of that. And basically, they give you a percentage of whatever you invested back. So it's basically an easier way if you don't want to, do too much work. It's an easier way to make some steady income. Now let's talk about how do you get started. Okay, I want to do this, but how do I get started? Let's talk about that. All right, here are the steps. Educate yourself. Read books, attend seminars, watch videos like this one, and follow real estate blogs to learn the basics. Knowledge is power, and the more you know, the better decisions you'll make. Don't just try go investing in some random stuff. That's just going to cause chaos. Set clear goals. Determine what you want to achieve with real estate income. Are you looking for long-term wealth building, short-term profits, or passive income? Your goals will dictate your strategy and the types of properties you should consider. Build a team. Surround yourself with a knowledgeable team, including a real estate agent, a mortgage broker, a lawyer, and a property inspector. Having a solid team will help you navigate the complexities of real estate transactions. Financing. Understand your financing options. Get pre-approved for a mortgage if you're buying property, or explore other funding methods if you're investing. Consider traditional loans, private lenders, or even partnerships. Market research. Research the market you're interested in. Look at property values, rental rates, and market trends. Understanding the local market is crucial to making informed decisions. Start small. If you're new to real estate, consider starting with a small property or single-family home to gain experience. This will allow you to learn the ropes without taking on too much risk. And then you can end up growing your portfolio from starting off, people have started off from a small house and they end up going to huge major apartments. So yeah. Now let's talk about final factor, due diligence. Always perform thorough due diligence before purchasing a property. This includes inspections, title checks, and understanding local zoning zones. This step is basically essential to avoid costly mistakes. Sometimes people complain about stuff, but that's because they didn't do their due diligence. They didn't check something about the area, and then they complain about it. Make sure to check everything and know all your info. Now let's talk about common mistakes to avoid. When starting out in real estate, it's important to avoid common pitfalls. Here are a few to look out for. Lack of research. Don't skip the research phase. Understanding the market is crucial. Make sure you know the area, the property, and the financials inside and out. Over leveraging. Be cautious with borrowing too much money. You don't want to end up in a lot of debt. Ensure you can handle the mortgage payments and other expenses even if the property doesn't generate immediate income. Underestimating costs. Property maintenance, taxes, insurance, and unexpected repairs can add up. Factor these into your budget. Always have a reserve fund for unforeseen expenses. And like I talked about, neglecting due diligence, skipping inspections, or ignoring potential issues with the property can lead to costly problems down the road. Always do your homework to avoid nasty surprises. Okay, let's talk about the conclusion and some next steps. Let's get into the conclusion and some next steps. Getting rewarded real estate can seem daunting. If you just started or you want to start, it can seem like, whoa, I have to follow all of these steps. But with the right knowledge and preparation, it can be a rewarding endeavor. Remember to educate yourself, set clear goals, and build a strong team. Start small, do your research, and always perform due diligence. And like always, be sure to subscribe to my channel and make sure to like this video. Also, comment what other videos you would like me to post. I hope you had a nice time watching this video and learning something about real estate. Peace out.